The markets hardly moved week on week amidst the backdrop of the flood control project hearings. Are we safe or unsafe? Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. U.S. inflation edged up in August as companies passed Trump's tariffs onto consumers, with the consumer price index rising 2.9% year over year, its highest since January, but stayed at 3.1% from July. Food prices rose 0.5%, with groceries up 0.6%, the sharpest monthly jump since August of 2022, driven by spikes in coffee, beef, and other fresh produce. Prices for consumer goods beyond groceries also rose, with notable increases on airline fare, vehicle repair, used cars, and lodging. So we are now in an unfavorable setup ahead of an expected rate-cutting cycle by the Federal Reserve, with Jerome Powell signaling a rate cut next week in their September 17 meeting, not due to easing inflation, but because of worsening jobs market data. Jobless claims hit a 4-year high. Payrolls growth has slowed to just 22,000 in August, and revisions show almost a million fewer jobs added over the past year. Now, despite the deterioration in the U.S. economy, especially the labor market, the S&P 500 continues to melt up, hitting another all-time high last week. The S&P 500 has surged 31% since April 9, marking its strongest 5-month stretch in about 20 years outside of a U.S. recession. Now, stocks are climbing the wall of worry, right? So this phrase refers to markets moving higher once bad news is already priced in, allowing investors to shift their focus on future expectations instead of past setbacks. So what's happening now is considered past, right? So if we move towards tomorrow, all of this will be past and we can move forward to better news. Better news being increased spending for artificial intelligence. This anticipation has pushed AI chip makers like NVIDIA, AMD, Broadcom, Taiwan Semiconductors to all-time highs. Now, looking at the rate cut expectations, markets are pricing in 3 rate cuts this year as investors worry that the Fed was too slow to respond and now needs to catch up to save the labor market. Now, this delay is what economists call being behind the curve, right? So, meaning they are late in responding to changing economic conditions. Now, so with interest rates easing in the next months, Morgan Stanley even expects 4 rate cuts due to the deterioration in the labor market. Now, investors are now flocking to buy U.S. bonds. So when you buy U.S. bonds, this drives the price of the bond higher, thus effectively pushing bond yields down. So it's like when you're buying REITs, as A REIT's price goes higher, the dividend yield of A REIT goes lower. So the same thing is true for bonds, because investors are anticipating that rates will go down. They now want to get bonds while the rates are high. So this is driving the bond prices up and interest rates to go down. Now the 10-year yields has already broken support and it's on its way probably to 3.895%. Now the 20-year yields also breaking support at 4.65, possibly also on its way to 4.366. And again, the struggles on the DXY continues, with the dollar index hanging on to dear life at the 97.8 area. But investors are also anticipating that this will eventually break down, as evidenced by the inflow into safe haven assets like gold. Now, gold has again hit an all-time high last week, extending its win streak to 4 weeks. We don't get to discuss crypto that often, but it's also worth mentioning that due to all of these things happening, right, Bitcoin has also rallied to all-time highs in the past weeks and has bounced off from a pullback to 107. Now, the issue with Bitcoin particularly in the Philippine market, is that it competes with our local stocks. And when crypto is bullish, it often pulls money away, leaving the stock market weaker. Now, a look at the Bitcoin cycle doesn't look good for the PSEI in the short term, as the Bitcoin rally could last well into next year, maybe up to around February or March of 2026. So we have halvings every 4 years. After a halving, there's a correction and then a rally, right? So this bullish Bitcoin cycle happens for 2 years, after which there's a peak to bottom cycle, which will last for 1 year, after which there will be a bottom to halving cycle, which lasts another year. So we are now here at the tail end of the Bitcoin bullish cycle heading into 2026, from which we will now get a peak to bottom cycle and then another bottom to halving cycle. So 2 years, 1 year, 1 year. So this market weakness will most likely persist until the end of the year. But for now, without the benefit of artificial intelligence, the markets unfortunately perceive the government not to have intelligence, artificial or otherwise. The PSEI continues its losing streak to 5 weeks to end the week back into the 6,100 support zone. So we gapped up last Friday, only to see Monday fill the gap, and saw the index consolidate along the 6,100 to 6,125 zone, with the Senate and congressional hearings in the background. And like a certain senator, we do not know if we are safe or unsafe from breaking down from the support area. So what I usually like to do is to zoom into the 1 hour chart or even the 2 hour charts to see some clearer patterns. So we now see a clear downward trend here on this price channel. But lately, we may be seeing some signs of consolidation, but the bias could still push the index downwards. Now see here how the price action bumps into the 50 EMA and has continued to struggle breaking through that resistance area. So it's going to be the 6,100 support versus the 50 EMA resistance for this week, as the markets take a break from the flood control hearings. Who will win? Let's see, right? But plus maybe unsafe this week, as the hearings on online gambling will continue this Tuesday after being canceled last week, possibly due to the leadership shuffle in the Senate. While we are talking about safe and unsafe circumstances, let's look at the current safe and unsafe stocks in the PSEI. Look at the top stocks in the index in terms of foreign inflows from August 18 to September 10 shows the clear favorite here, Ayala Land, with a net inflow of 1.4 billion, with JFC a far second. So buying opportunities on these names may present itself when they pull back, as they have foreign buying support. Now, a quick look at last Friday's favorite still shows Ali and Pure Gold continue to have strong foreign support. Now, let's look at the unsafe names on the index conglomerates. SM, AC continue to be sold off. Banks and telcos still facing significant selling pressure. I mean, just look at SM here, 2.7 billion in outflows. Top foreign sold last Friday, BPI, the conglomerates SMAC, the telcos, Globe and Tel, and especially Converge, right? Let's look at the chart for Converge. Converge has fallen 22% after breaking down the 14 pesos support now. So we already flagged this as a critical zone for Converge, and technicals held true, as the gap here proved to be fatal for Converge, as it stopped along the next consolidation area around 1150 to 1078. Now, if we lay out an anchored VWAP here, possible levels of support, so we are not there yet actually, so there could be a possible consolidation along this area and a drop to 10 or 9 pesos. Then let's see what happens. Look at this gap here, right? So for this week, avoid conglomerates. They are not looking good, except For LTG now, LTG presented a buying opportunity after the pullback on its X date. It's hit resistance, immediate resistance at 15 pesos. Buy on pullbacks for LTG. Now AC still feeling some selling pressure, not looking good. See the wicks here, meaning that every time it goes up, it's being sold almost immediately, right? So we could see AC even hitting 500 or 480, where the price may become more interesting for bottom fishers. Now SM at a very tempting level, right? 474 as we expected here, and it's along that area. But of course, with the foreign selling pressure, we don't know if this has already bottomed out or 724 is possible. So be careful, but it's a tempting buy for long-term investors. Ayala Land, the top foreign bought stock, pulled back. It's time to buy for Ayala Land for me, right? Now, SMPH hit resistance here at 24 pesos because it is a foreign sell favorite. Most likely, it may pull back to 22.90, but if for some reason it manages to go up, because look at the buying pressure here in reverse to AC. Once it goes down, investors are willing to scoop it up almost immediately, pushing the price back up. If it breaks out to 24, the next resistance is at 25.25. As mentioned last week, if you want to ride the gold rally, the best play is Apex Mining. Apex did not disappoint. It has hit our measured target here at 842, ending the week at 857. Take some profits here. It's a bit overstretch, enjoy the gains, wait for pullback, then just buy again. So as expected, OGP consolidating, right? As it's already overstretched. Felix Mining also pulling back in time, consolidating, not a pure gold play. The price action for Felix Mining held back by the sharp drop in copper prices, right? So let's now go to consumer stocks, pure gold. Pull back to the 20-day EMA, a good opportunity to buy. Immediate resistance here at 44.10, 44.65. And just look at that gap also, right? If it breaks out of that area, it could push price action to 54.05. Now, same with Wilcon, right? Now, Wilcon, another foreign favorite, hit resistance here at 1040. Let's zoom in, right? It hit resistance here at 1040. Pull back to almost, what, 965, ended the week at 1002. It punched through the 200-day EMA, came back, supported by the 20 EMA. So it's between the 20 and the 200. Now, if we overlay the VWAP chart here, we can see here that there's the support here at 9 pesos. It was resistance. It broke resistance here at 9. It could test support again at 916, but again, look at that gap and look at the next levels of resistance here. Gap, the next levels here, 1294, the next levels here, 1716. So this is like converge in reverse. One thing to look out for this week, Wilcon. Finally, we have Globe. Globe hoping we can get a double bottom here. Let's see what happens. A good entry would be for Globe to bounce off there and then clear this neckline here, hit resistance, test, retest support here, and then bounce back. So that's the best case scenario for Globe. Tel, more selling pressure here. Let's see how it reacts to 1,100 zone for PLDT. So with the flood control projects on pause this week, let's see if the markets can hold on to the 6,100 level. Hopefully, we can consolidate along this area as we unwind the ghost month, which will end at around September 22. Right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.